Good morning. You're watching Global Business Report with me, Karthik Malhotra. Over the next 20-25 minutes, the top stories from the world of business, finance, art and culture coming your way on World Business Report on Newsline Live. Wall Street saw a modest rise today, fueled by fresh inflation data, hinting at a potential halt in interest rate hikes by the Federal Reserve. Meanwhile, a bullish forecast from Target added momentum to retail stocks. The Dow marked an almost half-point gain with fractional upticks seen in both the S&P 500 and the Nasdaq. Let's take a look at all the market action coming in from the US.
U.S. stocks ended higher on Wednesday after more signs of cooling inflation and an upbeat forecast from retailer Target. The Dow gained nearly 0.5%, while the S&P 500 and Nasdaq ticked up fractionally. Shares of Target surged nearly 18% in their biggest one-day percentage gain since 2019 after the retailer forecast fourth-quarter profit largely above expectations. Target's bright outlook also helped lift shares of Macy's, which rose 7.5%, and Kohl's, which closed up almost 9%. The Commerce Department on Wednesday said retail sales fell for the first time in 7 months in October, but not as much as economists had expected. September's strong sales figures were revised upward. Other data out Wednesday showed the biggest decline in wholesale prices in 3.5 years in October, offering more evidence of easing inflation, a trend that should continue, says Sam Stovall, chief investment strategist at CFRA Research.
Our expectation is that inflation will continue its stair-step down to about the 2.2% year-on-year change for the core PCE, the personal consumption expenditure reading that the Fed likes to look at. So between now and this time next year, our feeling is that we will be substantially lower. There could be a month or two in which we end up with flat readings. I don't really expect any backward movements, meaning uptick in inflation along the way.
Among other movers, shares of Walt Disney rose 3% after reports said activist investor Value Act Capital had acquired a stake. Not all retailers saw a lift Wednesday, as shares of TJX fell more than 3% after it forecast current quarter profit below Wall Street expectations. And SiriusXM shares rallied 6% after Warren Buffett's Berkshire Hathaway took a stake in the audio entertainment company.
All right, and even as further monetary tightening in the US may not happen, the situation in Japan could be a little different. In economic landscapes, Japan finds itself grappling with a downturn. And compare that with China. China's economic trajectory surprises observers with unforeseen vigor. Japan's economy experiences a dip, presenting challenges, while China's unexpected resilience raises eyebrows and fosters discussions about the diverse Asian economic landscape. Let's take a look at this comparison.
There were conflicting fortunes Wednesday for Asia's big two economies. In Japan, new data showed the country sliding closer to recession. GDP contracted 2.1% over the third quarter. That was much worse than economists had expected, and a downturn from rapid growth in the previous 3 months. The weak reading reflected lackluster consumption and capital spending, with firms and households both battling inflation. It also dashed hopes for a post-lockdown rebound in domestic activity to offset weak demand overseas. One economist told Reuters there was a real risk of contraction in the next quarter too, an outcome that would put Japan back in recession. Prime Minister Fumio Kishida has unveiled a package of measures to help households cope with rising prices, but analysts have generally been skeptical that they will have much effect. Over in China, the picture looked a little brighter, with figures for October beating expectations. Industrial output grew 4.6% on the year, hitting its highest level since April. Retail sales also came in stronger than expected, while the jobless rate held steady. However, China's economy continues to face numerous challenges, including weak demand for exports and the turmoil in the country's vast real estate sector. Beijing, too, has been laying out measures to boost a recovery, but economists say they have had little impact as yet.
All right, and let's see what's happening in the UK. The United Kingdom witnesses a significant slowdown in its inflation rate, a development that sparks optimism for both the Bank of England and the Chancellor. The notable deceleration in inflation numbers fuels hopes to stabilized economic conditions and strategic fiscal planning. Take a look.
British inflation cooled by more than expected in October. Official data showed Wednesday that annual consumer price inflation plunged to 4.6% from September's high of 6.7%, while high price growth in the service sector eased. The rise in consumer prices was also the smallest in 2 years. The data showed key inflation measures watched closely by Britain's central bank dropped more than expected. Core inflation, which takes out energy and food prices, fell to 5.7% from 6.1%, and service sector inflation was also down. The data offered some relief to the Bank of England and Prime Minister Rishi Sunak. He had promised to halve price growth this year. But many economists and opposition lawmakers say the government blamed external factors for the rise in inflation and then tried to take credit for the later drop. Britain also still has the highest rate of consumer price growth among Group of 7 nations, slightly above France. There was also a warning from one leading analyst at Barclays. They said the UK economy is facing stagflation and the road ahead will still be challenging.
All right, a likely stagflation in the UK to continue, but what's happening in Germany? A German court's ruling has dealt a substantial blow to the government of Germany, presenting a formidable hurdle in the form of as high as $65 billion worth of budgetary setback. This verdict reverberates across the financial and political spheres, underscoring the complexity of economic governance and its legal implications. Take a look.
The German government was dealt a big blow by a constitutional court on Wednesday. Its finances were stuck with a $65 billion hole after a court ruling on unused funds from the global health crisis. The decision forced authorities to freeze major spending pledges focused on green initiatives and industry support. It also threw this week's budget discussions into disarray for Chancellor Olaf Scholz's three-way coalition.
The Constitutional Court's ruling, of course, has immediate consequences on the Climate and Transformation Fund, where the €60 billion which were planned are no longer available. That is why the budget plan will have to be discussed again, and it needs to be worked over.
The country's coalition had agreed 2 years ago to transfer debt raised to help with the health crisis to a climate fund. The move allowed the parties to make the most of a temporary suspension of borrowing limits in the constitution. But the Constitutional Court ruled it was incompatible with the debt brake enshrined in Germany's constitutional basic law, and so was void. Finance Minister Christian Lindner now faces more questions over how he plans to keep spending in check.
Die Bundesregierung respektiert dieses Urteil.
The German government respects this ruling. It creates clarity on the debt brake. The ruling, however, has potentially large consequences on federal and state budgets.
$65 billion was set aside for numerous initiatives like making buildings more energy efficient and subsidising chips production. One leading research group called the ruling a massive setback for the government and said further spending cuts now look unavoidable. Germany's budget for next year and financial plans through 2027 are due to be finalised on Friday.
All right, from Germany, let's move to Germany's neighborhood, France. Renault, the automotive industry leader, sets ambitious aspirations for its Ampere electric vehicle unit, charting an audacious course towards groundbreaking objectives. With bold targets in sight, the company aims to redefine the electric vehicle market, signaling pretty clearly a shift towards sustainable automotive innovation. Let's take a look.
Renault is setting some big goals for its new electric vehicles division. It's due to roll out a host of new models in the coming years, including a revival of past names like the Renault 5 hatchback. On Wednesday, the French car maker said the unit, dubbed Ampere, expects revenues of close to $11 billion by 2025. The news came as Renault held an investor day for Ampere, hoping to drum up support for an IPO next year. However, its plans have been complicated by signs of a slowing market for EVs. Increased competition from Chinese rivals hasn't helped either. Some sources have told Reuters that makes Chief Executive Luca De Meo's valuation target look ambitious. He had hoped to see Ampere valued at up to about $11 billion. Now Renault says it won't give the unit away on the cheap. The firm says it still prefers an IPO, but could look at other options. A key goal for Ampere is to sell EVs at the same price as combustion-engined equivalents. It's hoped that small models could hit price parity in 2 years.
All right, selling EVs at the price of combustion engines definitely seems like one innovation to watch out for. But staying with the auto sector, but moving a little maybe from electric vehicles to hybrids, the market leader for hybrids, Toyota, is making a significant stride now by announcing its plan to transition the entire Camry lineup of cars to hybrids. A bold move signaling a major push towards more sustainable transformation and transportation. More in this Reuters report. All right, so amidst ongoing economic worries, Americans are getting at least some small relief, on Thanksgiving costs, offering a silver lining for many during this holiday season. Take a look. Yeah, well, prices lower than last year, but still much higher than pre-pandemic 2019 levels in the US. Well, tensions also rise as New York takes legal action against PepsiCo over what? Over plastic pollution. That's right, sparking a contentious debate about corporate responsibility and environmental impact. Take a look at this story. Okay, Hollywood stars Margot Robbie of Barbie fame and Jacob Elordi add star power to the premiere of Saltburn, captivating audiences with their presence and shining a spotlight on the film's debut. Their attendance at the event amplifies the buzz surrounding this eagerly anticipated cinematic release. Take a look.
Jacob, Barry, those miles on the left side.
You all right?
Yeah, I've got a flat tire.
Take my bike.
Mate, that was so kind.